Hello everyone, my name is Fraser Waldron. I hope you're doing well. In this video, I want to talk about the situation going on in the Middle East right now, specifically as it relates to oil prices. No one knows what's going to happen in the next few days, let alone the next few weeks, but oil prices have risen rapidly, over $100 a barrel at the last time I looked. But there's huge volatility swings, whether the U.S. presidency or the U.S. office sends one tweet, one formal announcement, can send the price of oil rapidly moving. And I'm going to articulate this position based on what it means for your investment portfolio, specifically long-term investors, not specifically traders who are actively buying and selling, which is a different thing. So the situation currently, as it stands, is that the oil exports from the Middle East, specifically from the Persian Gulf, are restricted because the Strait of Hormuz has essentially been shut down as the Iranian government or the Iranian regime has said that any vessels trying to transit it potentially could come under attack. And this has stopped all of the oil and natural gas exports coming from Qatar, Bahrain, Saudi, and the United Arab Emirates, and Kuwait and Iraq. So this is a massive deal in geopolitics because many countries rely on this source of oil and natural gas and other derivative products for their economies, specifically China, Europe for natural gas, etc. So if you're living in one of those jurisdictions, this is something that's relevant for you in the short and medium term. That being said, if you're North American, we're less dependent on oil and gas from the Middle East, as America is the largest producer of oil and gas in the world, and their level of dependency from gas from that region is relatively smaller comparatively to the OPEC shocks back in the day, decades past. So the current situation is a bit different. If you look at what's happened on the ground kinetically, or things that have blown up, the U.S. and Israel have not targeted oil export infrastructure. Now, there has been attacks in Tehran, for example, on oil storage facilities and domestic production for gasoline, things of that nature. But that's domestic consumption from Iran itself. If you're looking at what Iran can export, although the Strait of Hormuz is closed, the oil infrastructure, specifically Craig Island, has not been attacked as of the time I made this video. So from that perspective, it looks like the Americans and the Israelis appreciate at least that for whichever regime takes over in Iran or whichever regime stays, whatever the outcome is over the next few months, whichever regime is in place, they'll require oil exports in order to survive because that's their main revenue source for the entire country when it comes to government spending. On the other side of the coin, within the Gulf country states, the GCC, all of those countries are heavily reliant on oil and gas exports, but those export capabilities have not specifically been heavily targeted. They're extremely vulnerable and hard to protect because it's just massive infrastructure, and it's potentially easy to target from Iran's point of view, but they have not done that because by doing so, that would make those countries most likely retaliate by attacking their export capabilities as well. And because these are massive production lines and export infrastructure, it would take years and years and years to repair. So it would essentially be a mutually assured destruction type of scenario where the game theory side of it is it's not worth it for Iran to attack those export facilities because they will need export facilities themselves. So in this case, states, in my opinion, are self-interested. That's how they're motivated. And it's Iran's self-interest to maintain its ability to export oil when the hostilities are reduced, regardless of which government is in place at that time. And the regime's main goal, in my opinion, right now is to remain in power. So that's something to consider when looking at this geopolitically. That being said, it is possible that the conflict can close up in the next few days. I think America and Israel's main strategic objective is to degrade the Iranian regime from having the ability to make, shoot, and use ballistic and cruise missiles missiles that can hit Israel, missiles that could attack the wider region. I think their goal is to not destabilize, but to, well, maybe that too, but is to degrade that offensive capability, as well as degrade any nuclear facilities that Iran maybe still possesses, and their ability to fund their proxy network of different groups like Hezbollah, Hamas, the Houthis, etc. So I think that in the short term, that has essentially been achieved probably already, if not in the next few days, and that would give an exit ramp for them to stop those strikes or at least do a ceasefire, and that would bring back the market essentially, especially if Iran reopens the Strait of Hormuz essentially. And if they don't, I think there'll be huge pressure from all the countries to reopen that, including from Saudi, the United Arab Emirates, all the different Gulf countries would rapidly move on that, I think, because it's in their national self-interest to do so, and that's a key economic lifeline for them. So that's the situation right now. That being said, if the the conflict plays out over a longer period of time, specifically natural gas in Europe, that would be something I would be looking at from a trading perspective, to looking to play that. And it would also be the biggest concern, because obviously the spring is coming into Europe now, but if there is natural gas supply curtailment, let's say, then could be something significant way down the road, like especially next winter. So that'd be something I would be looking at more carefully if I was a European country, specifically looking at the geopolitical context in the Middle East to see if this conflict cleans up over the next few months or few weeks. That being said, if you're a long-term investor, the way I would describe it, which is you're diversified over currencies, so you've got USD, Australian dollar, Canadian dollar, euros, yen, etc. You're diversified over currency. You're diversified over sectors, so you've bought oil and gas, but you've also bought the tech sector, banking, manufacturing, construction, etc. You're diversified over all the different sectors of the world, and then you're also diversified over geographies. So you've bought U.S. equities, you bought European equities, you've bought Chinese equities, you bought the world's equities. If you've got a nice diversified basket of investments, then in my opinion, at least for me, if it was in my shoes, which is my shoes, because that's my portfolio, I'm going to sit and ride this one out, regardless of the volatility shocks. If the markets significantly take a turn for the worse, let's say, we get a big retracement, let's say, I would consider that a buying opportunity, because my buy and hold strategy is for many years. I've got an over 7-year time horizon for that basket of investments. So if the bathtub starts to drain, if everyone takes their water out of the bathtub and goes to cash or goes to safety, I'm going to be I always keep 6 to 9 months of cash for emergencies, but also for opportunities. So this would be an opportunity I would consider. So although war is terrible and the situation is dynamic, if the equity markets really do take a dive, and I don't perceive it as a short term, unless there's something amazing going on that expands the regional conflict to maybe like a wider conflict. Barring something really extreme like that, then I'm going to be buying all the dips, dollar cost averaging in, which is buying little bits at a time, buying markets that I think are going to go up over the very long period of time. I don't expect to make money over years even, but over a 7 to 10 year window, I'm very happy to look back at history and through World War I, World War II, Great Recession, Great Depression, OPEC shocks, etc. Markets, the global basket of markets always rises over time, and I'm happy to put that probability to the test that hasn't failed yet, or over 100 years of data, let's say. So going back to it, I think if you're an investor, don't lose your mind in this situation. That would be my thoughts on the matter. Of course, find your advisor and go to professional advice for sure. But I know for me, definitely from my personal point of view, I'm not too worried about it over the long term. But that being said, from a trading perspective, volatility is good for traders, and it's definitely a volatile time right now. So from the trading perspective, I definitely am looking at like natural gas, oil stocks, etc. I was loading up on those a couple weeks ago just as tensions rose. So there's definitely things where you're buying and selling. But remember, if you're trading, that's active investing. You have to have a buy and a sell, and you have to, maybe use other instruments like options, etc. And that's a skill set that took me a long time to build up. So don't just be trading on a whim, especially through geopolitical events. It's very difficult because, again, one tweak can change the whole dynamic. One change of position by maybe a regime change in Iran, for example. If that happens tomorrow, that would change the markets as well. So I think if you're trading, it's dynamic. But if you're investing, you should be relatively relaxed. Just buy and hold and keep on with the strategy. If you're not super interested in finance, this is where you need a good advisor or someone you trust, because you'll kind of forget the rules of your long-term investing thing. And when something happens like this, you'll go, oh my gosh, I'm panicking. I have that feeling in my stomach. It's time to sell. And that's when you need a good advisor to say, hey, we made this plan, 5 years ago. It's a 25-year plan. Like, we're still sticking to it. Everything looks good. You're diversified and things look nice based on the portfolio you created, which is meant to handle shocks exactly like this. So don't let your emotions lead you to sell prematurely, no matter what happens. But if you're buying and holding and you don't need to access that money in the next 7 years, let's say 5 years, then continue with that strategy would be my opinion. At least from my portfolio, that's what I'm doing. So yeah, I hope that's it. If anything rapidly changes, then I'll do another video on this for sure. It's just I've been getting calls from people in my network who I've helped in the past with their investments. And especially the people who are not that interested in investments, they're calling me and saying, oh my gosh, should I sell? And that's when it's hit like the common person's ear, like they've seen it on the news, they're starting to freak out and they forget the principles of that long-term investing. So just stick with the plan. At least that's what I'm doing. And I'll update if anything magically changes from my perspective on that. But really, there's almost no scenario where I would change my portfolio allocation at the current moment for my long-term investing. different for trading, but if you're just in the long-term investor, you should be good as long as you're diversified over asset classes, currencies, because, you know, some currencies go up and down, like the US dollar's gone up rapidly in the last little bit, so we'll be diversified over all the currencies, and then sector and geography. We want to buy the whole world's bathtub, and we'll wait. If the water leaves a little bit, we'll wait for that water to come back in, because it always does, because we're in a situation of endless debasement, so people can't keep their money in cash because they're forced to put it back in. So that's it. A lot of information there, but I hope that was useful. If you think that I'm totally wrong, I'd love to hear it in the comments. I'm always looking to learn, and I'm not a source of perfect information, so happy to be educated on any of the things I might have missed. And yeah, I'll catch you in the next video, and I hope you're doing well.